Hey everyone, this is Jussi. I run a small investment firm that specializes in REIT investing, and today I'm going to give you an update on Medicals Properties Trust, which is a very controversial REIT that specializes in hospital property investments. The stock of the company has crashed over the past years because of severe difficulties that it's going through, but lately there's been some very good news about the company, and I think that this increases the likelihood of the company eventually recovering and potentially becoming a very rewarding REIT investment. But before I get into it, I want to clarify two things. Firstly, I've been wrong on Medicals Properties Trust so far. I was too quick to discredit the short sellers. I've lost a bunch of money, and so I've been wrong and I might be wrong again, so take anything I'm gonna say with a grain of salt. And then secondly, while I think that things are improving for Medicals Properties Trust, it still remains very speculative. It's in a very risky situation, and so if you decide to invest in the company, make sure to size your position accordingly and also do your own research. And this includes checking what the short sellers have to say about the company. They have been right so far, and I'll discuss some of the risks also towards the end of this video. So with that out of the way, here's all the recent good news. Firstly, Steward is making some progress. In case you're not familiar with Medicals Properties Trust, its biggest tenant is called Steward. It represents over 20% of its rental income, and on top of that, Medicals Properties Trust has also lent about $630 million to Steward to help it deal with its financial difficulties, and this doesn't even count all the deferred rent that Steward owes Medicals Properties Trust because it's not current on all of its rent payments. And so the good news is that Steward is making some progress. It just recently announced it had agreed to sell its physician network to UnitedHealth, and while the sales price has not been made public, the management attests that it should be enough for it to repay all of its outstanding debt obligations to Medicals Properties Trust. This is very good news because the main reason why the stock of this REIT is so heavily discounted is because of the situation with Steward. The company has not been able to make its rent payments, and on top of that, the market doesn't like that Medicals Properties Trust has been lending a bunch of money to Steward, and so if now it's able to repay its debt obligations and potentially start making rent payments again, that obviously will be very good news for the stock. Then the second piece of good news is that Medicals Properties Trust itself also has managed to sell a lot of assets lately in order to repay its coming debt maturities. In early April, the REIT announced it had agreed to sell 5 properties for $350 million, and so this brought its cash equivalent to about half of its debt maturities this year. And now, just more recently, on the 12th of April, it announced some more good news. The REIT has entered a new joint venture with an institutional investor, which has been rumored to be Blue Owl, but I have not been able to confirm that, selling a 75% stake in 5 hospitals that are leased to CommonSpirit. This 75% stake was sold for $886 million, so this is pretty big volume for the REIT, and the sales price was just a touch below the cost basis of Medicals Properties Trust. Then on top of that, the newly formed JV also obtains a $760 million non-recourse secured loan at an implied LTV of about 65%, and that resulted in another nearly $200 million cash proceeds for Medicals Properties Trust. So in total, the cash proceeds from this one deal alone are over $1 billion, which combined with the $350 million from the other deal is bringing up the total sales proceeds to about $1.5 billion for Medicals Properties Trust. And that's not all. Encouraged by these recent dispositions, the CEO of the company had this to say in their most recent press release. We are now confident that we will exceed our initial target of $2 billion in liquidity transactions in 2024 based on the valuations achieved on recent transactions and the terms we are actively negotiating for additional transactions. And so this leads me thinking that the REIT will likely announce more similar deals in the near term. They own 430 properties, and most of them are performing quite well, and they have good relationships with a number of hospital operators as well as private equity companies that could have interest in these necessity infrastructure-like investments. This is very good news for a number of reasons, but in short, for one, it allows the REIT to prove to the market that these assets are valuable, but even more importantly, it's going to allow the REIT to repay some of its coming debt maturities, reducing the risk of it facing a default down the line. Before I go into the next piece of good news, can you please do me a huge favor and click the like button? That will help me a lot to grow this channel. Thanks so much in advance. And then the third piece of very good news here is that the REIT has finally announced its dividend, and it wasn't cut, it was kept at 15 cents per quarter. For a while, we suspected that the REIT might suspend its dividend given the recent difficulties collecting rent payments from a tenant like Steward, but we are glad that given the recent positive developments, they've now announced a dividend, even despite the announcement coming 2 months late. At the current share price, the dividend yield is about 15%, so that's quite significant for shareholders. But obviously you're not getting a 15% dividend yield without taking significant risks, and that's what I'm going to discuss next. The first major risk to consider here is that Steward may still go bankrupt, and it represents over 20% of Medical Properties Trust rental income. Steward is in the midst of a major liquidity crunch, and this has forced Medical Properties Trust to defer some of its tenants' rent payments since the fourth quarter of last year, and it remains very unclear whether Steward will be able to return to making normal rent payments. A recent Wall Street Journal expose also revealed that Steward's hospitals continue to suffer very significant financial distress. There's a lack of maintenance capex, there's a growing list of unpaid contractors, and that's clearly not very encouraging. Finally, Medical Properties Trust has retained a bankruptcy and restructuring law firm, which seems to indicate that the bankruptcy of Steward might be imminent. So while the recent sale of the physician network is good news, this doesn't mean that Steward is out of the water yet. It's still facing very significant financial distress, and the situation remains very speculative. The second major risk here is that Medical Properties Trust has quite a bit of debt. Its LTV is about 50 to 60% by our estimate. Its debt to EBITDA is 6.9 times, and it has quite a bit of debt maturities coming its way in the coming years. Its weighted average interest rate is currently 4.1% as of the end of 2023, but given that the REIT has a B+ credit rating, we would expect its borrowing cost to be closer to 8%. In fact, the yield to maturity of its bonds is about 12%, so it's likely to face a very significant expansion in its interest expense in the coming years. Fortunately, the REIT should be in a good position to address its debt maturities coming in 2024 as well as in 2025 with these recent asset dispositions and more to come. However, in 2026 it will have about half of its total debt maturing, and this is going to be very tough for the REIT if it's still dealing with tenant difficulties. So in short, the REIT has now bought itself some time, a year or potentially even two, thanks to these asset dispositions, and hopefully more to come. However, it's not out of the water, and a bankruptcy of the REIT is still a possibility. Trading at just 3.5 times FFO, offering a roughly 15% dividend yield, and seemingly trading at a very large discount to its net asset value, we think that Medical Properties Trust will ultimately be a zero or a multi-bagger if it managed to recover from this crisis. We think that this recent news increased the probability of Medical Properties Trust recovering from this crisis and becoming a very successful REIT investment over the coming years. However, it remains very speculative, and we have been wrong so far, as I mentioned in the introduction, and I may be wrong once more. Now let me know in the comment section below what other REIT you would like me to cover on this channel. Medical Properties Trust had been requested by many people. Another one that's often requested is WP so I'm gonna work on that one next. But if there's another REIT you're interested in, just let me know below. Then I also wanted to remind you that we're still offering a 2-week free trial for High Yield Landlord, which is my REIT newsletter. So if you want to access my entire portfolio as well as my trade alerts in real time, you can join us for a 2-week free trial. I'll put a link to it in the description of this video. And then finally, if you're interested in REIT investing, make sure to subscribe to the channel. I plan to post a few REIT CEO interviews over the coming weeks. And also, if you want to support me, I would really appreciate it if you could click the like button. Thank you so much in advance. See you at my next one. Bye-bye.